A check of what's happening in the world of business. We're joined by our business editor, Kate Moody. Kate, let's begin with the latest in a trade dispute between the United States and France. It's over a new digital tax. Tell us a bit more.
Well, Tom, the United States is backing down slightly on this issue, this spat that it's been having with France for the last few months. The U.S. Trade Representative's Office has suspended the application of a 25% tariff on about $1.3 billion worth of French imports. It was going to be targeting luxury goods, things like champagne and cosmetics. Now, the tariffs were announced last year and they were due to be imposed yesterday. This was going to be in retaliation to France's decision to push ahead with a digital services tax. It's called a GAFA tax here, targeting companies like Google, Apple, Facebook, and Amazon. And it was going to be a 3% levy on digital revenue for those kinds of companies. Now, there had been a truce between the two countries while talks on an international framework on a digital tax were underway. The United States withdrew from those OECD negotiations over the summer, and by the end of 2020, France had confirmed that it would be going ahead and begin collecting that tax. Now, the USTR says that it is only suspending this retaliation in order to coordinate its response on similar issues in about 10 other countries. The UK, Spain, Italy, Turkey, and India are among the countries that are all pushing ahead with similar tax measures. They're all reportedly being investigated by the Trade Office in the United States. The European Union, as well, is considering a common policy on taxing those sorts of digital giants. It says that it is ready to engage with Washington over all of this. Now, it's not quite clear what stance the incoming Biden administration might take on this issue of digital tax. We know that the president-elect does want to improve ties with traditional allies, including Europe, although there may be some continuity when it comes to trade policy in particular. So this will undoubtedly be a challenge, one of many that he's going to have to face in the coming weeks.
Okay, and another story you've picked out for us this evening. A deal in the luxury sector has been confirmed today. It's been on and off for quite some time, hasn't it? I'm talking about the merger between Tiffany and LVMH.
Yeah, several years in the making, Tom. LVMH backed away from the merger last year as the pandemic hammered the luxury sector. It also then cited at the time some concern about that potential tariff that would have targeted some of its luxury products. Now, however, it is a done deal. Tiffany coming under that umbrella of brands, which include, of course, the flagship Louis Vuitton and Moet Hennessy. 3 LVMH executives are going to be moving over to take on key roles at Tiffany, that struggling American jewelry firm, which will now be looking to expand its client base. Wasim Cornet has more on this story.
After a tumultuous engagement for a marriage that may have never seen the light of day, LVMH, the biggest luxury company in the world, has sealed the deal with iconic American jewelers Tiffany. When the takeover was first announced in November 2019, LVMH's chairman, Bernard Arnault, did not hide his excitement.
It is an American icon that is becoming a little French. Our ambition is to make it shine with all the care and determination that we have shown to all the companies that have joined us throughout our history.
LVMH's takeover bid was initially set at $16.2 billion, the largest deal ever seen in the luxury sector. But the coronavirus pandemic hit Tiffany's earnings hard, and as a result, LVMH sought to pull out of the deal, saying the French government had asked them to delay the merger over a trade dispute with the U.S. Tiffany sued the luxury giant, triggering a legal battle, but the two companies did return to the negotiating table. While Tiffany was seeking a new partner in an uncertain luxury environment, LVMH was keen to avoid heavy fines if the deal fell apart. They were able to agree to new terms and a lower price of $15.8 billion, a better deal for LVMH, helped by Tiffany's record sales over the festive period.
Okay, so the negotiation process is over. That deal is signed. Now, just before we go, Kate, just tell us how Wall Street's faring today.
Well, Tom, stock markets have largely shrugged off the chaos that we've been seeing on Capitol Hill. Investors focusing instead on the prospect of a bigger stimulus and relief package under what we now know will be a Democrat-controlled House of Representatives and U.S. Senate. We're seeing new records for both the Dow Jones and the NASDAQ. The NASDAQ jumping above 13,000 for the first time, surging about 2.5% with less than an hour of trade to go. Also breaking records today are shares of Tesla, which have soared to about 7% 20% to a new high there. The electric car maker is hoping that its environmentally friendly products will be in higher demand if, as expected, Democrats push through more legislation about pollution levels in the United States. Now, that surge has also taken the personal wealth of CEO and founder Elon Musk to new heights. He has overtaken Amazon's Jeff Bezos as the richest person in the world, with a net worth estimated at $185 billion. It is a very rapid jump to the top for him. Just a year ago, he was worth a mere $27 billion, not even in the richest 50 people in the world. His company has also seen a similar meteoric rise there. It is now the world's most valuable car maker, despite producing just a fraction of the vehicles as traditional manufacturers do.
Yeah, I can still remember times when they were saying that Elon Musk was in financial difficulty. Clearly no longer the case. Thank you very much indeed. Our business editor, Kate Moody. Thank you.